We've talked about who you are, why you exist. We've talked at some length about the legal and regulatory environment you're operating in. Could we talk a bit now about the actual products and services which you're offering? You're not entering a green field here. There are lots of intermediaries, actors, market participants out there providing services already. I'm thinking here not just of asset managers that you're talking to, but custodian banks, trading venues of various sorts, including traditional exchanges, registrars, transfer agents, and of course your friends in the legal profession. So, which of the established participants in these markets are you looking to work with now?
I think the answer to that is many and varied. If we look at the established marketplaces, we're working with 6 globally systemic important banks, including within them custodians, as you would naturally expect. And that's helping us understand the dynamics of what would need to change because the processes and procedures of working with the sell side with GSIBs fundamentally needs to change to support the active and efficient processing of digital securities. Similarly, from their perspective, they're looking and saying, where's the demand coming from? And that was also one of your earlier questions. And the demand is coming from the global asset managers who are looking to satisfy the emerging investor demand for digital securities. And they'll also be looking to support crypto securities in that way. But in our case, it needs to be a financial instrument. It needs to be a security for us to be interested. In addition to that, we've got the issuance platforms. So you look at the likes of Agora, NowCM, and Origin. NowCM, interestingly enough, actually bought the issuance platform, the trading platform from Orange as part of what's connected to ID2S, just keeping the theme there. Mm-hmm. We're also talking to a number of different trading venues, and funnily enough, also started talking to CCPs. In addition to that, trading venues, from our perspective, we're looking obviously a Luxembourg-based service. You can reach out with the potential to support all 27 EU member states. We're looking at venues in different locations and how we may be able to help. Registrars and transfer agents, depending on which country, what they're called and how they operate, there are different nuances there. And you're exactly right, there's a significant number of lawyers that we're working with, because part of what we're behind this, you asked about our products and our services, we've also got to be thinking about those products. Are we actually talking about something where the legal and the economic benefit transfers with the security, or is it something where it's a digital representation of it that's moving and the different legal treatments that are there? So we're dealing with all of those types of participants, but we're also dealing with the emerging world digital securities entities who are coming to market. So we're working with a raft of different new actors in the marketplace who are looking at how they can meet and support the demand that's going on. And quite naturally, we're working with people like Archax, our parent, not only in their MTF broker and custodian business, but also they've just launched a new tokenizer. So we've obviously been looking at the different standards they've got and how that all works. So a raft of different discussions, but ironically, to get us ready for the MVP, for our minimum viable product, that's got down to a small cohort of probably no more than 10 participants that we're dealing with in a very regular, daily, intuitive way as we build the service ready to be authorized.
You mentioned CCPs. Is that conversation or those conversations primarily about netting?
It's interesting. I won't go into too much detail around it, but there is that is one of the key aspects that the CCPs can offer. But also, if we look at where the marketplace is going, and I've worked with CCPs since 1992, unfortunately showing my age, but since 1992 I've worked with 1997 I've worked with CCPs. Everybody is going to be modifying the role. All different actors are going to modify the role that they perform in the marketplace to support digital securities, but maintain the one they've got for the conventional securities. So if you look from an ecosystem point of view, CCPs can offer a range of different services. They're there for the risk mitigation of these transactions, and some of that risk mitigation can still be required for digital securities. So we're not in the game of eliminating disintermediating actors. What we're actually doing is working with the existing actors and with the newcomers to actually identify what are the functions, what are the roles, and how are the processes and procedures going to change to support what is going to be a bigger capital market than we've currently got.
Now, what about the asset classes you're going after? You mentioned earlier that they included conventional asset classes, but clearly they're going to include tokenized asset classes, i.e. existing securities that are being tokenized, but also, and you've mentioned this a number of times, native digital asset classes. And so you've got these at least three different sets of asset classes you could go after. And I guess they each need different types of support. So how are you going about, maybe give us a list of what you look at, the asset class you're looking to support? Clearly bonds is among them, otherwise you wouldn't have mentioned the likes of Origin and Agora. But how are you going about supporting the different asset classes that you could attack? It's a big marketplace out there with lots of different assets you could pursue.
I think you're exactly right. And one of the things very much in our mind is if we went through all of it in a comprehensive way, we'd run out of money long before we'd be live. So the focus for day one is to offer a digital corporate bond-based service denominated in euros, settling in central bank money through Target 2. We've already been through some detailed discussions with the central bank regarding the model and the process that we'd be adopting. That's been designed into our system, and that's being built at the moment. So we're aiming to offer our members and our participants an issuer CSD service that supports the settlement of digital securities, both native and non-native. Initially, if you look at the native, it would be a native corporate bonds using blockchain at the core. So that's the first bit. If we then look at the tokenization of funds, there obviously tokenization of bonds, we've had to look at the asset tokenization. We've had to look at converting the rights of the asset of the security into the digital token. We've had to look at the representation on the blockchain. We've had to go through all those, and that's where we're working very closely with some of the pre-issuance platforms or primary issuance platforms, and we're working also, interestingly enough, Archax is building its own primary issuance platform, or has launched, but we're working very closely on the bond side. If I then move beyond there, we've got, trying to think how I could actually describe this. We've got three very active groups with global asset managers around the funds side. And this is where we've been decomposing the different product sets, whether it's a mutual fund or not, fixed income funds, equity funds, target date funds, open-ended, closed-ended. And I should have said actually on the bond side, UCITS compliant bonds as well we were looking at. But on the fund side, we're working with different buy-side firms who also themselves are issuing the instruments, actually around the individual requirements that they've got for both their existing and their future products. So we see a significant amount happening on the fund side. Beyond that, we naturally are looking, and we're going to be driven by demand. The one beauty of being a relative startup, we've been going a couple of years now, is that we've got the agility to move very quickly. So if we see more demand coming in on structured products, or warrants, MTNs, we've already done the preliminary work, but we will flip and work with the marketplace, especially on the buy side, to work with meeting those requirements and meeting that demand. The technology that we've got the capability, if we wanted to offer all the range of product sets that can be met, that could be asked for as they currently stand in conventional markets, and all the corporate actions. But as I say, if we were to do all of that, we'd run out of money very quickly. Where we're being a little bit more prudent is around things like cryptocurrencies, DeFi protocols, and so on. At the moment, those are not in our gambit. It's important to make that differentiation, that we are sticking very much with what are financial instruments, very clearly identified to the regulators, MiFID compliant. We have had discussions regarding real estate and illiquid or privately managed assets. And those discussions will continue, but I'd say at the moment we're looking at the greater demand coming in the bonds and the funds marketplace. I haven't mentioned equities. Equities is a significant market and has achieved some of the benefits that we see being required from blockchain. Equity capability is going to be or has already been designed into our service. Not all of that's going to be built for the full equity service from the beginning.
I'd ask you to clarify one thing. If you are going after assets in their traditional conventional form, and I'm talking here by assets, I mean securities, what does that mean? You're a digital asset CSD, a digital securities CSD. What does going after assets in their traditional form actually mean?
What it means is we've got to have the capability to support conventional securities in the same way as we see the evolution being that we would need to be able to support a number of different fiat currencies across the marketplace. Our ambition and our remit is to support those that are digital securities, but we've got the same embedded capability to offer both. And one of the interesting dynamics that we've got there is the ability to commingle conventional securities with your digital securities. So if you now take us along the adoption route, and what is going to appeal to financial institutions is the ability to reduce the level of fragmentation in markets and to reduce the level of bifurcation that's going on in the markets. There's no question both have to happen. There has to be fragmentation for digital securities to be introduced into the marketplace. Processes, procedures, operations, functions are all different. Sorry, some are the same, but they all have a difference. The treatment is also different. The legal construct is also different. But the underlying technology doesn't have to be. And so from our side, we're looking at the ability to enable both to coexist. Is there demand for us to come in as a new CSD for conventional securities? Well, actually, there's quite a few out there at the moment. So the only thing we do is, maybe do a cost push against the existing the incumbents. But the real appetite is there to meet the new securities. But we're making it possible so that we can support both from very early on in our existence, and we've got the capability and the technology to be able to support conventional alongside. Just think about the ability to pull it all together and to offer it so that you could hold, and we're going to have our own centralized DLT, which means that we are the only validator on our blockchain, which means that we give certainty around the legal jurisdiction in which those are, the transaction is being settled. But the ability then to have those held and transferred across wallets that you may wish to have, whether it be on Algorand, Corda, Tezos, Hedera, Hyperledger Bezu, Hyperledger Fabric, Ethereum, that part of the market of where that demand is going to come from, those are in effect devices. They are mechanisms by which you can hold wallets. What we're looking at is making the capability that you can have it wherever we agree that you can have it and where we support, so you can move it between different blockchains. So from our side, it's really important that we can support conventional, because that needs to sit alongside the emergence of the new digital marketplace.
I can see why it's useful to asset managers to have a service which insulates them from operational complexities of switching between digital and non-digital securities, if you like. But you were very specific that cryptocurrencies and DeFi protocols were not of interest to you at this point. At least one other digital CSD has taken the view that, again, wanting to service its particular client base, some of them do hold cryptocurrencies and they'd like to stake those, and so they provide a service to do that. Tell me more about your thinking about wanting to avoid that. Is it because of their regulatory uncertainty, or is it something else?
I think it's more a question of certainty. If you look at why were CSDs put in place? They were put in place to offer certainty. They were put in place to help make sure that there was greater clarity and prudential stability in the marketplaces. Now, we would have no issue whatsoever if financial institutions are creating a security where the underlying is crypto. That's not an instrument that we would be settling. We'd be settling a security. And that's the first piece. But I do think you raise a very interesting point on this. And that is the one that our starting position is to build a walled garden, whereby it's financial products that are settled, financial securities that are settled inside the walled garden. Outside the walled garden, where you start talking about cryptocurrencies, DeFi protocols and everything, you've got the unwalled garden. And we believe that in due course, we could take the same disciplines, maybe take them outside of our regulated CSD and operate and offer those services with the same rigor, the same disciplines, the same controls and governance that you already have in financial markets for the DeFi market. But that would be a separate entity operating a separate service, but with all the same disciplines and so on. Could be that it doesn't offer the insolvency protection because it wouldn't be a CSD operating a security settlement system. But the benefits of taking financial market controls, rigor, discipline, supervision, and so on, and applying that in an unwalled garden is certainly something that we're mindful of. But let's walk before we get carried away and overcommit what we're trying to do.
You said you're working with the incumbents in the traditional industry and you want to work with them, but your ability to work with them successfully is obviously going to be tested to some extent by the range of services that you offer. For example, if you, as you are, parent company is involved in the issuance side, that's going to put you at odds with, I don't know, traditional exchanges. If you get involved in registration, you're going to be at odds with transfer agents. If you do custody, settlement, asset servicing, you're going to be competing with global custodian banks. If you do collateral management, you're going to be competing with global custodian banks. Across all of those fronts, you might be competing with the investment banks. So which services are you planning to offer, and how do you see those interacting with the incumbents in the marketplace?
That's a fascinating question, actually, Dominic, because once you put blockchain technology in place, you bring the proximity of the transfer agent, the registrar, and also the proximity of the custodian closer to the operation of a CSD. But what you fundamentally change is it is not the way the world operates today, that information is sent to a CSD internally functions, carries out its functions, and then maybe after a batch system has run for 2 hours or something, it throws out the answer. We're not building something for that era. We're building one where actually the transfer agent and the registrar is interested in the underlying beneficial owner. They're interested in knowing who the shareholder is. So is the issuer and the issuer agent interested in that level of data. That level of data actually isn't of interest to the CSD, but could be held on the same blockchain. The CSD is interested in the legal entity. The CSD is interested in offering omnibus segregated accounts, traditional segregated omnibus, but also the ISA account model as well. And that puts us out to then support and work closely with the custodian. But now you put it into a world of saying, we have the ability, not as a CSD, because we'd only be authorized for the operations of notary, security settlement, and general maintenance. We've got an ability here to actually work with the other intermediaries, with your transfer agents, with your paying agent as well, and with your custodian, and actually offer life cycle support such that we'd have the ability to process corporate actions all the way through to, let's say, a global custodian who's got 10,000 or 100,000 accounts, out through those accounts with their blockchain technology to the end user. So you've got the immediacy of all those transfers going through in a much more seamless way. The value added by the global custodian or the sub-custodian to their end client, to their clients, is significantly increased. The potential cost saving is in the order 30, 40, 50% cost saving, and the value to the end investor is significantly increased. The proximity between the investor and the issuer is also closed, but you haven't got a CSD actually sitting there saying, guess what, I'm now going to be a transfer agent, I'm going to be a registrar, I'm actually going to be a custodian, and so on. Because without those other intermediaries, you'll be standing alone and no one will want to operate with you. And therefore, it's really incumbent upon us and those participants to look at how we can do it seamlessly, but each can specialize in the areas for which they're regulated. And there's enough complexity bringing in natively digital and tokenized securities, as well as the support of the conventional, to say it's far too big, far too complex a game. And also each end of the spectrum, that facing off to the issuer, that facing off to the investor, is going to be dynamically changing. If you think that a CSD could handle 50 million accounts, well, I don't know any CSD that does have 50 million. There may be. Certainly, Shanghai Stock Exchange 23 years ago had 50 million accounts. So why would we look to replicate? And why would we think that we could handle that many? The whole idea is this is a scale game of which each of the intermediaries has a key role to play, and the processes and procedures need to change relative to them and their customers and their marketplace they're facing off to. So I hope that gives a degree of comfort. Certainly, I don't think in 10 years' time, I don't think we'll even be called a CSD, but I think we'll perform the same functions. And the marketplace, the way it's changing, will actually say, we need those functions to be performed as consistently, but more efficiently, more effectively, and without the duplication and without the zero add activities. We need those stripped out, but we need those functions. And I don't mind whether you call us a CSD or something else, but those are the functions we'll be regulated to perform.
Just so I'm clear on this disintermediation point, you're in effect saying to the transfer agent and to the custodian, you keep the client relationship, we're not going to get involved in that. And the other advantage of working with us is that we insulate you from all the operational and technological complexities of helping your clients interoperate with digital assets of all kinds. Is that the basic proposition?
Very much so, very much so. And the degree to which they may wish to hold information to a lower level, that's absolutely fine with us, because holding that all in a single record means that right from the point that you've created the security, all of that information can be held to the parties who need to have it. You're back to having, in the same way as we're creating a digital, a DLT-based CSD system, our blockchain is actually centralized, even though it's called distributed. It's centralized because we're the only ones who validate the nodes. But beyond that, then having the securities transferred and held across multiple different blockchains, because we're agnostic as to where people hold their wallets, both for cash and for securities, whether it's held at the legal entity level, which we'd be interested in, whether it's held at the ultimate beneficial owner, whether it's segregated, whether it's omnibus, all that goes on around us. We concentrate on the most important thing for us, which is offering our 3 core services.
You mentioned accounts and said you didn't want 50 million accounts, but you might want 50 or 500 or 50,000 accounts. And insofar as you are offering customers accounts or the equivalent of accounts, are you going to offer a range of them? Are these going to be omnibus or segregated according to choice, wallets or traditional accounts? What's the range of account structures you're going to offer?
It's going to be both omnibus and segregated. From our perspective, that's and also within that, you've got the ISA account operator service that we'll be offering as well. I think let me just qualify in terms of the 50 million accounts. We'd love to have 50 million accounts. We'd love to be in a position where we could service, but we'd have to make sure that the AML, KYC, and everything else happens. But the world that we actually, and we see, for example, when I was in Gibraltar, one of the firms out there had 2 million customers. Well, those 2 million customers might have turned around and said, and that's with a bank, might have said, we'd actually like to hold our digital assets at Montis. Well, they could do so. But we see it more a question of saying, how are we going to make sure that we've got a reliance model around AML, KYC? How can we see that actually a lot of the additional services to enable a much more global business to operate? And most of those people that we see would actually want to use the existing custodians, because I certainly, for one, don't have the time, and I know many other people would say, I actually want the custodian to perform the custodian services. And what we're able to do is offer a more seamless, more straightforward, more automated, should we say, rather than straightforward, more automated approach. And we give the custodians a window straight onto the portfolio, so they could be holding wallets on multiple different chains. And internally, they may have all their own records of that, or if they haven't, they could see the whole portfolio view by having a wallet. We used to think it was called a node, but it's not. It's to have a wallet on the Montis CSD. And they could see all of their portfolio at any time. Your question about the accounts, we're going to offer the capability to hold a single record that reflects the unique ownership chain that's relevant. In our case, we'd look at legal entity level. This offers a common ledger within Montis, showing the full ownership chain for the custodian, client, beneficial owner, for those who are permissioned to actually see it. We're going to provide, and this is what the DLT allows us to provide, a flexible account structure. So we've got the transparency that we're offering there, whilst at the same time, we've got regulatory and corporate governance rules that need to be met as well. But to your point, the account structure, there is some flexibility in it, but we're going with what the market already demands today from the starting point.
Going with what the market wants, one final question for you on products and services, which is that not everybody is going to want to settle atomically. Are you going to be able to offer people settlement timetables of their own choice?
We're currently working with the market to agree what that choice should be. The answer is yes, there will be a choice. It doesn't have to be atomic. We think that would be extremely limiting if we did so. We see very much that there will be demand, and it will be for phased or well-timed settlement periods. But the reality is we could offer it at any time that people want. There may be, depending on how complex that gets, there may be an additional cost to it. But you've got to look at, and we're very keen on keeping the cost down as much as possible, but we are looking, saying, is there any reason why you couldn't strike a trade and say, I'd like this to settle at 3 o'clock this afternoon because I know by then I'm going to have the right elements in place? Well, one of the things we've got to think, and we're working through with the financial institutions, how do we make sure there's no double spend? How do we make sure you've got the securities in place? How many, all the cash in place? What are those dynamics? And that's what we're working through to. At the same time, as you rightly say, there could be an opportunity for the netting. There's also an opportunity for people to offer a stock lending and borrowing service. Because if we're offering a deferred settlement, as you're saying, then you've got to have enough of the ecosystem in place to support shorting, for example, and that certainly can be the case. Let's say our starting position is to see that there is funding, whether it's because we're offering a liquidity management system. So we're going to have euro central bank money, euros, available in our service. So long as that's there, we can fit within the settlement time periods that entities would want, but we'd need to make sure that we can ring fence so that there's no double spend of that cash. Work in progress as to how flexible we can be. but we've got a few months before we're going to have to finalize that. But the first service is being built so that you can actually offer pre-funded atomic settlement or agreed timing settlement.